What's up, everybody? My name is Jason, and welcome to Small Biz. It is Wednesday, March the 22nd, 2023, and in today's glass half full video, I'm going to explain why this is an insanely bullish session, why the bear market is definitely going to end, in my opinion, by Memorial Day, and what most people missed, what I'm going to call this, with respect to Jerome Powell's rather tired and angry press conference. All that and more coming right out. Right? Welcome to the effing jungle, ladies and gentlemen. That was my best impression, of course, the one and only Axl Rose. One of the best concerts I ever saw in the early 1990s. Not too bad in their elder years, actually. But I'm here to tell you guys that despite what this market is telling you, Dow down 530 on the close, it's 402 in the afternoon. S&P is off 66. The NASDAQ was down 1.6%. But let's go ahead right out of the gate and talk about what's very bullish. Number one, the dollar down. Interest rates way down. The 10-year crashing. The 10-year crashing was 3.58 before the press conference, closed at 3.44. So even though the Fed raised by 25 basis points, the bond market, which is 10 times the size of stock, says, Because if you saw the press conference, and I watched the whole thing, I thought the statement was perfect. It was very balanced. It was very measured. He tried to downplay in the statement the banking crisis, which I personally think for the most part was manufactured. There's no way they didn't know going from 0 to 5% was not going to create a problem for some banks in Silicon Valley, mostly because they're highly concentrated in one demographic, and that is startups. But then we progress into the press conference. And you noted, as I did in the prior one, it looked like Jerome Powell had smoked some hooch, and he was totally relaxed. I'm talking about the last Fed meeting a month or two ago. And I believe it's because he thought, hey, I've got one or two more hikes. I've got this inflation thing under control. No problem. And then along comes the banking crisis. And even if they did plan on squeezing out assets from smaller regionals and pushing them towards, as I believe, the large money center banks, which are largely controlled by flaming liberals like Jamie Dimon, CEO of JP Morgan Chase, it probably had a reaction that was much greater than anticipated, but he tried to poo-poo it. He tried to say no big deal. If you saw the movies The Naked Gun, when Leslie Nielsen is out in front of the fireworks store and it's going off behind him and he's like, nothing to see here. Please disperse. Nothing to see. Well, the market and banking stocks, which, by the way, didn't I tell you to buy WAL on Monday of last week and FRC? And if you followed my advice, you could have made 800%. And when FRC, as one example, hit $50, I said, sell it all and leave it alone. Some of you didn't sell it all. Some of you didn't leave it alone. And it eventually bottomed out, or did it, somewhere around $12. So I could go back to when I said buy Tesla at 105 in December, along with NVIDIA, Carvana, which I said get out of at 19. It bottomed. It was up today on a debt restructure. I said a Bitcoin was overbought at 28,000, down 1,600 points in the last 10 minutes and going a bit lower. I've been right about damn near everything except the stocks that we currently own. More on that in a moment. But I'm sitting there watching Jerome Powell, and he looks like he was up on a bender for like 4 days straight. So Jerome, with all due respect, you trying to poo-poo the banking crisis, bullshit. And the bond market doesn't believe it either. That's why, and this capital THIS is what most people missed in the press conference. The bond market does not believe the hawkish Jerome Powell, who repeatedly said, follow me on Twitter at TrySmallBiz, including his last statement of the day, we do not see rate cuts anywhere on the horizon if the economy holds up. But it was a brutal end. It was like he dropped the mic on the Bears and he said, F you, We are not going to allow this stock market to go higher. But what's the bond market, which again is 10 times the size of stocks, telling you we're going lower? In fact, the tips, as I talk to you now at almost 10 minutes after 4, just north of Atlanta, Georgia, is saying 50-50 chance of one more hike right before Memorial Day. And then that's it, because it also says we have 75 basis points at a minimum of cuts as we get into September at the latest of this year and going into next. But this is this that I'm going to put in the headline of this video that almost nobody, especially the Debbie Downers and the paper hands that are blowing out of stocks as we speak, we're probably going higher by Friday. First move, wrong move, right? We went up, we crashed down exactly once again, as I said, but I'm telling you right now, in my opinion, we are going to rebound a large portion of these losses by the close on Friday, because this that Jerome Powell touched on twice is as I was predicting all week long. One of the only bulls in the entire fucking stock market for the last 2 weeks. The same guy who said, buy the S&P at 3,800, sell it at 4,000. We are overbought. I said it. Watch my feed. Go down as far as you need to. I have been dead on with damn near everything except the basket of stocks that I'm going to allude to in a moment. But Jerome Powell said this: we at the Fed see the long-term Fed fund futures or Fed fund rate at 4% by the end of 24 and 3% by the end of 25, which I was saying well in advance of this press conference. So what does that mean with the Fed funds rate right now at 5%? It means the Fed is telling you, at a minimum, we are going to cut a point in the next 12 months, although Jerome said probably not this year. He's hedging his bet. It's a perfect setup. You tell people, I don't see it. And then when they actually cut in July or September, the market is caught off guard, and it's a moment, which I believe is going to happen before Memorial Day. But he also said, and nobody's getting this, 3% on the 10-year, which means 2 full point cuts by the end of 25. So this nightmare, which is 15 months long, which most people have made no money under Joe Biden, the worst, here comes a couple of premium cancels. Boy, it's been out of control lately. The worst fucking president, there's 2 F-bombs, in the history of my life. We have a situation, bit of a senior moment there. We don't edit around here, so if you're new, welcome. I also think for all of you that think that's all, folks, there's a Porky Pig moment. We are not taking that out. For those of you that think I'm a flaming Republican, wrong. I'm an independent. And I think that old turtle named Mitch McConnell, who I affectionately call Darth Vader, and you may as well throw in Ted Cruz at times, and Marco Polo in Florida, who I think is absolutely worthless. I take no prisoners. If they don't stand for small business owners, if they're not going to help folks like you and me that are working your ass off 24/7, 365 to provide for your family, I got a problem with it. They're all full of shit. You know that. I know that. The Democrats are bought and paid for by the teachers' unions, and the Republicans are owned by big business. And while they'll stand in front of the microphone and say, well, we've got 99% of all corporations that are small in this country, we need bullshit. They intentionally destroyed the smaller regionals. Jerome Powell had a chance. They asked him in the press conference, what do you say about all these deposits that are fleeing mid-size and smaller regionals? He stepped right over it. As I said they would yesterday, they do not give a shit about middle America. This is all about, just like the pandemic was, a transfer of wealth out of the mid-sized regional banks, preferably in red states like Arkansas, Mississippi, West Virginia, into liberal mega money center banks like Citigroup, JP Morgan, Bank of America, which donate billions collectively to the Democrat Party. But we have the Fed saying, we're almost done. The tip says maybe 50-50 by Memorial Day. When I say this bear market's going to come to an end in terms of the end of this avalanche of never-ending selling is over. And then they're saying, we are going to be on your side for 2 more years. And I personally believe, once again, putting my head in the guillotine, that we may have just seen the last rate hike, not only of the next 3 to 5 years, and the Fed is telling you that, but we're going to get cuts on our way down to 2.5% or 3%, which is the middle of the range where we spent a year at 10 years at 0 and just hit 5%. And the Fed could very well be completely out of the picture for the next 7 to 10 years. What does that mean? Well, if you know your history, going back 100 years, with the exception of the vicious bear market in 1973-74, the middle of the decade between the third and the 7th or 8th year is very strong. And the Fed just told us we're going to be on your side in a seasonally very strong middle of every decade. And as I've said before, we just had our third bear market that's about to end in the last 5 years, 2018, the pandemic, and now. So it's my opinion, despite all the doom and gloom, including the stocks that we currently own, I'll focus on TRKA as one example, are about to see the sun come up and shine, not just for the balance of the second half of this year, but for the next 3, 5, 7 years and beyond. Ladies and gentlemen, you have to stick with me. I know I've told you a million times that we're going to have 20 to, in my case, a minus 31.4% drawdown as we speak, at least once or twice a year. But if you're hanging strong, even if you're slightly irritated, which is fine, then you've suffered through the worst you're arguably going to see for the next several years. We must not throw in the towel. So, simply put, the Fed just told you we're going to maintain a hawkish mentality, if you will, on inflation until it drifts down towards 2%. More importantly, the bond market is telling you, as rates are now down at 3.43 on the 10-year. We still have the U.S. dollar down almost a full percentage point. And the VIX, the fear index, if this was the end of the world, again, down 530 on the Dow, wouldn't the VIX be at north of 40? No, the VIX closed at 22 and a quarter, up less than $1. The VIX is telling you nothing to see. This is an overreaction. Mark my words, by Friday and or Monday at the latest, half of those losses, and maybe even then some, including in our stocks, will be recouped. With that said, let me focus on TRKA. Follow me on Twitter. I tweet 20 or 30 times a day. If you get any value out of these videos, which I do several times a week, and my commentary on Bitcoin, interest rates, the Fed, etc., I ask you for $1 a day at trysmallbiz.com as a premium member. But if I'd have said to you on TRKA, which I shared an article about how revenues in the most recent quarter, and they're due to report again here in a couple of weeks, in the last quarter were up 1,125%, a 10x increase in revenue on TRKA, and they generated their first major profit of $5 million of EBITDA in their history. But if I'd have said to you 6 months ago when the stock was, let's call it 60 cents, TRKA is going to plummet and bottom out at a dime, you probably would have said to me, if you were long the stock 6 months ago, what are you smoking? This company's growing at 10x year over year. This stock is going a hell of a lot higher. Well, guess what happened? It went down to a dime, I think 9.5 to be exact. Then, as I pointed out many times, it broke out around Christmas at 15 cents. We got involved the first time at 50 cents when it broke the double top level of resistance at 46 cents. Scroll down my feed about 4 miles and you'll see the pics in real time. I sold it about a week later at 64.5, netted 28 or 29%, took major amounts of shit as it went to $1. And I was standing on the top of this desk. Actually, I had another one at the time, and I was saying, sell it all. Get rid of it all. I kept saying it was 4x above its 50-day moving average at 22 cents. Oh, it's going a lot higher. What happened? it went down 82%. And if I'd have been standing in a room full of those FOMO maniacs when it was dancing at 90 cents in the pre-market that day, as I was screaming at people, sell it all. I don't care that I got out too early. Fine, I'll be the redheaded stepchild. And I was for a few days. Get out, sell it all right now. If I'd have said to a room full of the biggest bears, the biggest Debbie Downers in the world, you know, this TRKA, which is 99 cents, again, just a few weeks ago, it's going to do a 90% round trip. Last trade, 175. There's not a fucking person in the world. There's not a snowflake or a Debbie Downer that would have been that bearish enough to believe what happened. And guess what? It did. So the guy or gal that was cut in half and then some when they saw their stock go from 60 to a dime never would have believed when they were down 65%, that very stock would 10x in less than a 2-month period. And then after it 10x's drop by almost, at this point, 85%. And this is a company that is up revenue-wise year over year, 1,125%. And yeah, they had a convertible Series E. It may issue an additional 33 million shares, but if you read the last filing they did, it says they were supposed to buy it all back, and they may. Why in the world did they hire Jeffries at a quarter, only to see the stock run to $1 and then go down another 40% from where Jeffries got involved? I say there's something afoot. Something is going on. Maybe they're allowing the dilution to take place. Maybe somebody is in there leaning on the stock so XYZ institution can suck it all up. And then they're going to come out, whether it's a buyout, which has been the rumor for a long time, a merger, and I'm not saying it's true, with somebody like a GNS, or this market wakes up and realizes what I just spent 15 minutes telling you. It's one and done by Memorial Day. The Fed said 4% by the end of next year, 3% on the 10-year. The 10-year is telling you we might as well go down to 4% right now, because there's no way in hell Jerome Powell, with this manufactured banking crisis, is going to continue on beyond Memorial Day. So in closing, if you have cash and you do not own more than 10% of what is pinned at Try Small Biz on Twitter, with the exception of BBIG, who I do not trust, you buy. And is it okay if you're not freaking out right now to go to 12, 13, 14% like me? Yeah. And if I had cash, what would I be buying right now? ENSC at 51 or 50 and a half. I'd be all over TRKA at 17 and change. And yeah, even though Sal, who is willing apparently to delete at record lows, and I hope he changes his mind on HLBZ, I think it's a buy. Half of his the float is owned by a guy who has an average north of $1.50. Last trade 0.117. We own it at 13. So if you guys will hang in there, if you guys will acknowledge the fact that I've been right almost every time with respect to markets, Bitcoin, interest rates, etc., and the same guy that generated over 100 winning trades in the last 12 months, even though he is down, to be exact, 31.8% at the close, I'm going to be the same guy who leads us out of the fire into the bar for a whiskey on a big rock. Until next time, I hope you stuck around for that. Always remember that I love you guys and I appreciate you watching.